First time buyer here in the UK? Then this video is for you. Here are 5 tips to help you avoid messing up when it comes to getting on the property ladder. Before I get started, let me introduce myself. My name's John Carpenter. I'm the founder and director of New Forest Financial, a mortgage and insurance brokerage based in the heart of the New Forest. I've helped numerous first-time buyers from all around the country get on the property ladder by avoiding these mistakes. Here we go. Tip number 1, get your documents sorted early. You really want to avoid finding the ideal property and not having that decision in principle ready for the estate agent because you couldn't find your documents to get them across to your mortgage broker. I'm talking about proof of ID, address, pay slips, bank statements, if you're self-employed, tax returns, tax year overview. Get them all across to your mortgage broker for them to get that decision in principle done for you in advance. And really importantly, get an up-to-date credit report sent across to your mortgage broker for them to review, so anything unexpected can be picked up early to avoid any mishaps later on in the process. Tip number 2, don't just go straight to your bank. Okay, I'm biased here. I'm a mortgage broker. Of course I want first-time buyers to use a mortgage broker. But the reason why is really simple. Your bank is just one lender. Therefore, access to only their products, whereas I can access numerous different banks and building societies with access to thousands of different mortgage products, making sure you are put on the best deal available. Of course, if you do go straight to your bank, what happens if they decline you? What happens if they don't like the property you're going for and they downvalue it? Where do you go to next? If you're using a mortgage broker like myself, be able to direct you to the next available lender or give you advice on how to proceed. So tip number 2, don't go straight to your bank. Tip number 3, know all your costs. It's not just your deposit you need to know how much you've got or how much stamp duty may cost. It's all the additional costs involved as well. Things like legal fees, you'll need a couple of £1,000s. There may be moving costs unless you can get family to help out when it comes to moving. You may have mortgage broker costs. Some, like myself, are free, others may charge a fee. Then there are lender costs involved. Some products have fees such as £999. However, when it comes to those fees, I normally advise clients to add them to the loan for a couple of reasons. 1, if you add it to the loan and the mortgage doesn't complete, you haven't lost any money. And number 2, adding it to the loan gives you the option when you complete to make an overpayment and pay it off anyway. So, as a first-time buyer, when it comes to applying for a mortgage, it's massively important you know your costs. Not just how much you can borrow, how much the mortgage payments are going to be, but how much the additionals are going to cost. Solicitors, moving fees, broker fees, product fees, etc. Tip number 4, get an agreement in principle, sometimes referred to as a decision in principle or even mortgage in principle, done up top. This shows estate agents and sellers that you're serious, that you're in a position to make an offer on this property. Without one, if you try to make an offer, it could be overlooked. It puts you in a much better position when looking for a property to get that offer accepted. Going back to an earlier tip, get your documents together, get them sent across, and I like to try and get a decision in principle, mortgage in principle, agreement in principle, done within 24 hours of receiving those documents. Don't have your offer overlooked because you don't have an agreement in principle done. Get it done up top. Show them that you're serious. Tip number 5, start budgeting before you buy. It's massively important to know exactly what you can afford monthly when it comes to your mortgage payments. I've often had first-time buyers borrow less than they actually could have because they wanted to ensure that their monthly payments were affordable. So get budgeting. Maybe start living as if you had a mortgage already. Write down all the essentials, budget everything, get everything down that you pay each month. What's important, what's not important, but get it all down. Start budgeting, start living as if you've got a mortgage already. You need to know what you can afford a month when it comes to your mortgage. Massively important. If you are planning to buy this year, especially as a first-time buyer, grab a free call or Zoom appointment with me. I'll help you plan, I'll answer any questions you have, and help you avoid any common pitfalls. The link to book a call or Zoom appointment is in the description below, and I look forward to hearing from you soon.